just start with some quick introductions. Frédéric, in case anybody missed the beginning, if you just spend a minute on yourself and Mosaic, just in terms of also where you're active, would be really interesting, I think. Frédéric.
So Mosaic is a specialized real estate asset manager, so specialized in healthcare in general, and with a particular focus on elderly care, be it nursing homes or senior living, and so we invest on behalf of institutional investors in these strategies, and then we manage the assets and the relationship with the operators, property management, etc. We do that across Europe.
Great, super. Andrew, coming to you as well, quick introduction of yourself, and I guess for those who don't know, how active AXA are in these markets.
Sure. Hi, Andrew Ovey. I'm responsible for healthcare investment at AXA Investment Managers Alternatives. We've got a little over €2 billion invested in healthcare across, globally. And that's split broadly, a third in acute care, a third in elderly care, and a third in senior living. Most of that is in Western Europe, but we are also invested in the US, Australia, and Japan.
Great, thanks very much, Andrew. And Nabil, coming to you, same for you. Interesting to get a sense of your role there, particularly at Goldman's.
Hi, everyone. Thank you, Richard. Nabil Aquedim. I'm an executive director in Goldman Sachs Asset Management, part of the real estate investing team in London, where I'm responsible for our hospitality and senior living investing efforts across Europe. And I guess in this specific sector, our investments are mostly focused on London. We're equity investors in Riverstone, which is a senior living platform building a for sale product for London seniors, and also lenders to Orient, which is a rental scheme in London as well.
Okay, great, thanks. And last but not least, Michael, interesting to get, just for those who may not know, just a quick introduction of yourself and ARCO.
Thanks, Richard. I'm the director of ARCO. We're the trade association for, we call it integrated retirement communities now, replacing that plethora of terms that we've heard before. So very much that housing with care offer, both from the private and not-for-profit sector here in the UK. I think just to give you an idea of how this market has grown, when ARCO was founded 9 years ago, there were 10 founding members, and now it's going on for about 50 operators and prospective operators and about 80 affiliated organizations and advisors around that. So the market really is growing very strongly, because I think what we've heard here today is really that under provision is very clear. And I think a trend that we see, and probably in countries like Germany and France, which I'm really interested about to discuss in the context of this. But I was also speaking at the World Aging Festival in Singapore last week, and this question of how do we provide alternatives to residential care, you can find that in any country, anywhere in the world at this point in time. And I think that's the interesting conversation in the context which we have it. And this sector is certainly still quite nascent here in the UK, but it's growing very strongly.
Yeah, no, it's interesting because with another hat on, we were also part of the sort of founding group who set up the Senior Housing and Healthcare Association with the idea of looking across pan-European markets in a way. And one of the topics that I think really is interesting as well from that, and came up a lot when you looked across Europe, was that discussion around definition. How can an investor look at something that's in Germany or in France, compare that with UK? So Michael, it'd be interesting to just get your sense of, I think Frédéric mentioned there were possibly 12 definitions. So have you been able to boil that down into one? And I suppose, what are the challenges there for the UK in terms of investors? And then I'd also be interested to get Andrew's, Nabil's and Frédéric's view on that. Michael.
It's a very good question, and something that we've been grappling with for quite a long time. And I think it's, if you ask Andrew or Nabil where they're invested in, and it is important that we understand exactly what we're talking about when we do talk about housing with care, because in Germany, would that be the Betreutes Wohnen or the Seniorenresidenzen? And I think other countries have struggled as well. I think in the UK is particularly bad. The reason why we actually settled on the term integrated retirement communities, because we understood that this has to be something that works from a stakeholder perspective, but also that the customers, the people actually will move in, that they don't actively hate. And what you'll find is that anything that has care in it or assistance is something that older people themselves don't like as a product. So we found that anything to do with assisted living, housing with care, extra care housing, does not go down well with prospective customers because it reminds them too much of their own mortality, of a needs-driven product, and we had to make it much more aspirational. So certainly this IRC product, this IRC term, is taking up quite well. What you do as an investor across Europe, I don't know. I'd probably recommend just reading more of these reports because I certainly find them quite insightful in clarifying some of those definitional problems that we have.
Yeah, no, that's great. I mean, Andrew, you're obviously operating across Europe there and globally. So I suppose how do you see that? I mean, how are you able to compare like with like? Obviously, it means a huge amount of due diligence, I guess, and knowledge in the market. But how much of a challenge is this for investors?
Oh, well, fortunately, we're only operating in the UK. We have an operating platform called Retirement Villages, which we acquired on behalf of our clients in 2017. Our international investment is generally on a lease basis. So we've actually got an operating partner who's taking care of the residents and leasing up the Betroitus or the apartments in that case. But regulation is key. It's it's something that I live with day to day across all of the healthcare markets, and different markets are different. Yes, it's down to due diligence. It's oftentimes working in partnership with your operator to make sure that you've got something that makes a lot of sense, both in the country and particularly for the resident, for the user of the space. That's crucial.
Okay, good. There's some questions coming in on the chat, and I'll come to those in a second. Nabil, from your point of view, I suppose when you're looking to invest, you're comparing obviously Germany, France. I mean, we've seen here that the room sizes can be incredibly different. There's so I guess how do you see those trends? Do you see the markets coming closer together in terms of the offering, or what's your sense of where we're heading with this?
I think markets differ by definition, and they follow somewhat market demand. But I think Frédéric mentioned it earlier. I think there is a lot of legacy in this market, and there have been decades of development which have been driven by different things, the nature of capital available, what's easy to create and develop, a lot of repurposing, etc. And I think we end up with a stock of product which can be very different. And I think our view and what we're seeing is that a lot of that is converging somewhat. I think we have this baby boomer generation coming to retirement, and I think there is a common call it demand of what this population is looking for at a pan-European level. I think they're probably looking for a place to downsize. They're looking for more space. They're looking for more lifestyle, and that's driving probably bigger unit sizes, which is exactly what we're seeing on new pipeline for the UK and for France as well. And that's also driving bigger schemes overall with more units and more communal space because economically that makes more sense, and because that creates more of that lifestyle and communal feel that customers are looking for.
I think Nabil's hit an answer there that's bang on. There's a lot of history in all of these markets. When you look back 20 years ago in France, it was very much a for sale model, and that has evolved in much with the development of the care system and the lack of EPAD available for development that's been constricted through regulation to open up a gap in a provision for seniors that has attracted a higher age group in a shorter span on a lower care level than you would require to get into a nursing home facility, but still you need that support and care. I think we're at a different stage in the evolution in the UK. There's no restriction on the number of beds that can be built. It's just care beds that can be built. So, we're moving in quite sort of traditional lines that if you require care, you move into an institutional setting. And I think as the market evolves and people have more choice around that, and that's very much where I think ARCO is driving, a group of investors and operators that are looking to provide that choice of older folk moving into spaces that make more sense for for their lifestyle and their living, rather than meeting purely their care needs. So ultimately, care is something that we're looking to provide in each of our settings to keep people in place for as long as they can be.
Okay, good. And there's been a question just come in actually from an anonymous attendee, but it just says, could we have an idea of the investments done by AXA into this, asset class, Europe versus the rest of the world? So I don't know whether, Andrew, it's possible just to give a kind of very brief kind of view on the types of assets, I suppose, and the sort of investments that you're doing or looking for.
Yeah, sure. So in Germany, we're invested in the housing with care that we have in Germany is largely operated by Corian. We've got co-located care homes and assisted living units, Betreutes Wohnen, and typically, one of those schemes will have twice as many assisted units as there are care home spaces. We've got actually 8 of those communities across Germany. In France, we're in a development of assisted living units in Greater Paris, and in the UK, Retirement Villages is the platform we're looking at. And again, that's operating, developing and operating these units. I can't really put a scale on each of those investments, but across the, as I said, about a third of our investment is in senior housing. So that's broadly, 800, 900 million euro across Europe.
Okay, great. Quick question coming on the chat as well from Miguel. Thanks, Miguel. Miguel will be interested to know the type of stock in the UK. He's actually working out of the Portuguese market. But I don't know if anybody has either a view on the type of stock that there is in the UK at the moment, or any knowledge of the Portuguese market. Feel free to pick that up if anybody's been looking at that. But interesting just to expand on that. If anybody has a view on Portugal, come to me. But interesting, maybe just to get a sense of the type of stock that's there. I was interested in that. Frédéric, in the research where you saw just the amount that was, I suppose, rental versus mixed use versus for sale, if you like, and the difference with that across Europe. So how do you view that as an investor?
I mean, that's what is interesting in looking at these reports, is that you see investors looking at things very differently, and in fact you realize that an investor in French or interested to understand what Andrew would think, but when you look at it from and you invest into a leased a facility, and you do that once the facility is built and once you have a lease, etc., and you don't look at it or enter it with the same sort of risk return sort of profile that when you invest really at the development level in an operating platform in the UK, and you're going to remain there for maybe 20 or 30, you invest with a 20-year horizon. So I think what you realize is that there are different products in different countries. Maybe actually some countries would benefit from importing or just replicating or having more rented models, but that would cater maybe for a slightly different type of population in the UK, and vice versa. Maybe doing more retirement villages in France and Germany. But again, that would cater for potentially a slightly different type of population. And I think that's what, if there was a conclusion, I think to be drawn from the different reports, is that actually there are, the 80 plus or the 75 plus population is very different. In fact, they have different needs, and they will keep on being more and more different. And we have seen segmentation in the residential market, like the non-elderly residential market. We will see that happening in the elderly market as well, and even more so with the baby boom generation that we know are more individualistic. They want to have, to reflect their own needs, etc. And they will look at things even differently. So this model is going to keep on moving, on having, more segmentation, more different products, and cross-fertilization across markets.
I think if I could add to that, I think a really interesting point for me is that if you look at pretty much every market for this type anywhere in the world, it comes from one of two directions. It either came from the more developer-led residential market that built more housing for older people, typically not much care, not much support, typically a house builder model, short-term development profit, which doesn't really work for this. And then you have the ones that come out of the care home market where people kind of went down the acuity scale and actually into a space that is, where care is delivered, but potentially the amenity wasn't quite where it needed to be. And I think you have that in lots of places. Australia, more of a developer model. They then moved into a more service and care heavy one. In New Zealand, for example, they came more of a care home operators reaching down. I think you have the same in the UK, that some of the kind of the earliest people building here were McCarthy and Stone, classic house builder. That model has been proven not to work over time because you can't run these things after you've built them. So that's the main problem. But at the same time, I think also maybe some of the earlier iterations were too medicalized, and I think maybe too much at the level of the aspirational element not quite where it needed to be. And you can also see that, I think, in where we are right now, which is not a bad spot, where we're kind of meeting, we're kind of finding the sweet spot in the middle. And what I would say, and this is really interesting in terms of the room sizes or the apartment sizes, not only are the apartments here bigger, but we now have members that don't build any one bed properties at all, because they build only 2 or 3 beds, majority 2 beds, because this is a product that attracts younger customer groups, maybe late 70s on entry. Now, if you have a product that is twice as large as a rental unit in Germany, for example, that's going to be much more expensive to rent. And I think that is also driven part of the business models, because quite frankly, if you're 78 years old and you're renting an asset which is quite expensive in terms of the monthly rent you are going to pay, then you're likely not to do that when you're in your late 70s. Whereas in your late 80s, that might be exactly the right product. So I think we've got something where these sectors came from is really important. The demographic it attracts is very important. And then you're looking at the longevity risk of effectively asset depletion and things like that. And that also explains the size of the unit, but also the business models that are offered to consumers. Because quite frankly, if you're 75, I would not recommend to rent a 2 or 3 bed apartment, because you're going to run out of money by the time you're 90. Likewise, if you're 90, would I recommend to you to buy something? Probably not.
I think there's an investment timeline overlay on the top of that as well, where rental is something that you can move to an income stream for your investment after, say, 3 to 5 years of stabilization. Excuse me, in our longer term investment horizon for retirement villages, for example, the development cycle, the sell down, and then the maturity as the long term income from the deferred management fee comes in. That's much more like a 15+ year investment timeline, which is a completely different investor. One thing that I would throw on the top of the French analysis is that actually when you look at the leaders in the assisted living sector, they are actually oftentimes partnered or owned by constructors as well. So that divorce of operator and contractor is still very much aligned, even in the strong rental markets.
Nabil, did you want to come in on that?
No, I think interesting thought from Michael and Andrew on the genesis for the sector, and people coming from 2 parts. I think the developer side and the care players, and I think that's probably driving to the models on the ground, where I think you have a for sale model and a for rent model. Like developers sell, care operators tend to rent. I think when you look at today's market, I think we get a lot of questions. Like, should the market create a product for sale, or should the market create a model for rent, and which way should you go, or apply in what you're doing? And look, I think our view is this is a sector that is vast enough to have, or to afford to have in both and hybrid models. I don't think this is you have to pick one. I think a lot of operators are going with hybrid models now. I think it is vast enough to accommodate the two types of offers, and it's not one or the other. I think there is the 85-year-old plus that you mentioned, Michael, who wants to rent and prefers to rent, doesn't want to pay a stamp duty on move-in, and there is also the 75-year-old plus who's used to owning his home, who's looking for a 2-bed to downsize and looking for that. And I think this is a big enough market to allow the two models to evolve and develop.
Good. There have been some questions coming in as well around the financing side, particularly. What's the situation there in terms of financing? Are, I suppose, people getting more comfortable in terms of potentially higher loan to value? What's the situation? I don't know if anybody wants to pick up the financing point.
Yeah, I think I can comment on what we're seeing. I think both on the as a borrower for some of our operating platforms like Riverstone, and also as a lender active in the market, I think the lender appetite is increasing, improving. I think 2 years ago, I think there was 3 years ago, there was a topic that was really hard to go and find a lender who can get comfortable with the asset class, the exposure, the projects. I think that is improving, but it's still a whole education journey. I think every interaction we have with lenders or players in the market is a whole education, and that's back to some of the topics we discussed on this session. The naming or the terminology itself, I think they come and ask, what is this? Is this assisted living or is this something else? What is the offering? How does it compare with elsewhere? What is the track record? And that's a big question for a lender. How much operating history do you have? And very often for private players coming to the market recently, I think that is hard to prove. So I think it is improving, but it's a long journey to continue to build that, call it lender education in the market. So.
And typically, Nabil, do you know what sort of loan to value people are expecting or targeting in terms of acquisitions? Is there is it 50%? Is it 30%? Is it 80%? Is it, just as a ballpark?
I think it's hard to put a number on it. I think what I would say is it is lower than what you typically get for a PRS or a standard residential project. I think lenders do factor in a cushion of safety for them and would be more conservative on leverage quantums and also on margins for the time being. We hope that during that journey, I think some of these things will improve and the financing market will converge towards the other asset classes.
I think if I were to characterize it, it would be that lending is still looking at the house builder model as a house builder would. And one of the typical challenges that an operator might find is a pre-sale requirement, which has proven extraordinarily difficult off a plan. Our customer tends to want to see the built product, before they commit to something that's just a piece of paper. So having a pre-sale requirement, very much off plan, to lead your lending. Your lending underwrite has been a challenge for this sector.
I guess I think most of Andrew's and Nabil's comments were maybe for the sale sort of model.
For sure, yeah.
I guess when you look at the rented model, it's quite a different one because the developer would, in most cases now at least, when they do institutional sales, they would have a contract signed already, the sale contract, so it's a forward purchase contract or VFA in France, and so in fact you almost don't even need financing for that, and then because you have the lease, of course the bankers, and I agree with Nabil, there's a lot of education with banks, as to what is the operator qualified and credit worthy, how much experience does he have, etc. But and because you have institutional investors coming into that sector, they don't look for to push leverage actually. So at 40-50%, you tend to find very reasonable financing for sort of this type of long-term mortgage financing.
Can I just add one point, Richard? I think that the thing about the rental model in the UK is one of the advantages for the customer is it's easy, they can move in quickly, and I think there's familiarity with it. But that's also the fact that the rental model is actually the most homogenous of the models. Whereas if you look at the for sale model in the UK, even within that, there is quite a wide variation of how people go about their business. And that's really around, if you're talking about the deferred fee model, the DMFs or something, the size of those DMFs and what you get for those DMFs is actually very different still between different operators. And we are seeing more convergence towards a higher DMF at this point in time. But that also makes the data points difficult because the metrics are quite difficult to compare from someone who makes a marginal development profit and a high DMF and someone who has a higher development profit and a lower DMF, for example. And that makes it quite difficult to compare. And then you add to that the regulatory complexity that if you look at other markets, like for example, in New Zealand, the market really took off when there was a Retirement Villages Act that put clear rules around what should be done and what shouldn't be done. And that gave both consumers confidence and investors the confidence to invest in those models. And that's something we're after here. But clear advantage for the rental model here in terms of it works and it's fairly easy to understand.
Okay, good. I wanted to pick up on one thing as well, which is in terms of location. We saw some of the locations there in the research, but does that also have an impact on price? So let's say, for example, can you expect the same type of product in a wealthier area of the country, potentially in the UK, with somewhere else, which is less wealthy? Can you give the same kind of care? Are there different price points? How does that work?
Well, I think the key point about different areas, and particularly when you're looking at housing wealth as the driver for many of our for sale residents moving in, then you are stuck with the idea that the build quality, the build cost is the same irrespective of location. The one thing that changes is the base land price, which is a significant part. But that's where the viability of schemes can fall down if you're delivering that kind of product. Now there are plenty of providers who are able to manage their local markets in a way that that benefits from their experience in specific locations. So it does work, but it's not necessarily something that's so achievable for a nationwide provider.
Okay, good. I was also interested to see that just the scheme sizes and the difference between that in France and in Germany. Any views on what's driving that, particularly in the UK? Is it a desire for actually there to be more of a sort of urban community here, and maybe that's different elsewhere? What's driving those sizes?
Well, if I may, just one point is that I think first, as we have seen, there's a lot of development in regions, so in maybe smaller, urban areas or peripheral to actually urban areas in more villages or small cities in the UK. So in fact, you have more space potentially to build. You can you can do that on a wider, larger land. That would be maybe one point. The other point is the way these things are built. In order to be able to have a platform of services that is actually makes a little bit of money, because that's what you need. You also need to have a larger number of potential customers that you can sort of sell these services to. So that's, I think, two explaining factors for why you have these larger sort of schemes in the UK.
And I think, Frédéric, just to add to that, I think it is a key point. I think what we're seeing, and also from an investor and developer standpoint, but also from a consumer standpoint, is I think the sector, the demand, and as a result of that, the supply is going towards a product that has more and more services, more and more communal life to it. It's not about the small unit you rent to get your care delivered into. I think it's about living in a community, and I think that explains that the larger scale of what we're developing, and Riverstone, for example, has adopted that vision to build bigger than average units, because one, economically that works better, and two, even for consumers, they want that to feel that they're part of a community. And that doesn't work if you have 30 or 40 units. That works when you have more people, more diversity on site, etc.
Just one more point on that. I think I agree with Nabil on that one. And then the other point is that historically, the private stock in the UK so far has been at the high end of the private market. And the UK is a bit different from Germany, for example, that like posh English people live in the countryside. So you can't really land a 250 unit behemoth in the middle of Surrey in a small village, because that would look a bit out of place. So there you have your maybe 100 unit development. Whereas now we're looking much more of a kind of middle market, or maybe top end of the middle market into that middle market slice. And that's a more urban product. And if it has to be in that mid-market price point for the reasons that Nabil had mentioned, you have to build them bigger to make the service charge more affordable. So I think it's the function of, chasing a slightly less premium market, and that happens to be a more urban market.
Your land cost in the urban space is significantly different as a proportion of your total bill than it is if you're building in a field in the countryside. And our drive in this space is far more urban and peri-urban. It's where people are. It's where people can remain connected to the communities that they're moving from, rather than moving into a community that has to survive purely on its own. People's self-actualization doesn't change when they hit the age of 78. What you've been doing in your local community is what you'd like to carry on doing in your local community. And that concept of integrated retirement communities, for me, absolutely means that it's the wider community that you're in, not just the building and the village that you're moving into.
And does this also mean that there's a kind of growing focus as well on the social impact side of things? There's a lot of discussion around the S in ESG, ESG, and particularly a lot of impact funds being set up. Are you expecting to see more of that sort of focused, purpose-driven capital heading into this part of the market?
Yes.
You're going to ask who? Yes.
Yes. I think we'll probably all agree on this answer. I think that the social purpose of this is like the absolute core of what this is: delivering a solution for the seniors who want to continue to live a healthy and better life. And I think this is fighting loneliness. This is delivering a solution for the social care burden, etc., etc. So I think this is the core of what this is. I think a lot of the interest from capital, from investors, and also from lenders who were talking about it is also driven by that. I think the social contribution is key, and I think a lot of the product that's being delivered also majors on the environmental side of it. So we see this as a big focus in the near and medium term for purpose and or impactful capital.
Okay, good. Totally agreed. I think it ticks a lot of the boxes. One thing maybe that it is a point of attention for these types of schemes, and Michael talked about it, about the where you put the high end, for the private sector, is affordability, of course. And as Andrew said, land is very expensive. Building new facilities, with all the construction costs also, increasing, is difficult to make the equation work. But you have to integrate also affordability into that to, I guess, be completely compliant with ESG. So that's maybe one of the challenges of that sector.
Okay, good. There's a couple of questions from Errol. Thanks very much, Errol, and Ulugh in the Q&A. Both around the design, I suppose more the demand side in some ways, but just in terms of, the interesting question around, I suppose, demand, especially we've got the baby boomers coming. And is there a distinguishing mark between housing with care and senior living? And what does that mean? Are we going to be ready, I suppose, in terms of the baby boomers coming through? Is that going to be like in the US, a kind of huge tsunami of I suppose, demand for a different area? And from Ulugh as well was, if there's going to be, still movement towards places with sunshine for retirement, so the Mediterranean or those kinds of things, should people also be looking at the UK as well as looking at places where people from the UK may choose to retire? So be interesting just to see whether anybody's got a view on either of those 2 points. So
can I take Southern Europe, which comes up a number of times, and the challenge that I have with that, I'm primarily a healthcare investor, is precisely that end, that higher needs moment, where my belief is that when you require greater care, you're oftentimes heading back to family rather than being in the community that you've moved to. The communities that I'm aware of in Spain and Portugal are very international communities. They are driven by Germans, by the UK, Netherlands, Scandinavia, moving into a place that's a greater place to live. And when you look back at the France market, as I say, kind of 15, 20 years ago, that was also predominantly in the more pastoral, rural, southern French regions, which, if you pardon the expression, is a much more holiday destination than the sort of integrated community that we're looking at creating in the UK markets. Now there are plenty of examples, and Florida is a great one of mass migration of older people into markets that are very supportive of that migration of lifestyle. So it's not without its examples, its international examples. One of the things that is that's still this fundamentally, there's a care element here. And when you look at the Southern European markets and the care home delivery and that the investment and the regulation around that, it's very different from what we've seen in the German and the French and the UK markets, and how that care piece of it has evolved as well. So it's not a straightforward question of following trends in different countries and importing international experience. Certainly from my capital perspective, it's a challenge to know that we're investing our long-term low risk capital safely in those kind of markets.
Okay, great.
I'm totally agree on that snowbird point. We regularly get approached by resort developers in Portugal or Turkey or whatnot, and I entirely agree with Andrew. I don't think this is something that works for this care heavy model, or certainly where that's provided. The downsides are stuff where you go to a more manageable property. I mean, Benidorm is basically that. It's full of older Brits, and that's not specialized. It's just they find their places to live. And I think the other point about the historical, regulation plays a part. What's the provision plays a part. My wife's Italian, so I'm hoping that the Italian market develops a really good senior living market before my mother-in-law migrates to her eldest daughter, if you know what I mean. But there are historical reasons how these markets developed, and I would very much agree with Andrew's point there that it's important to see where things came from, but also where they're heading with that local context.
Okay, great. So, Tim is saying he loves Italy, Michael. So that's
me too.
That's good.
I'm developing some care homes for your mother-in-law, Michael.
Specifically, Andrew.
Well, not specifically. There are many more rooms than Michael has mother-in-laws.
But if you've got any specific things that you want in those rooms, Michael, best to tell Andrew now.
Okay.
Good. Just a kind of quick, because we're definitely out of time, but just a quick, very quick round to everybody, just in terms of the, I suppose, what are the key risks at the moment? Are you seeing particular risks to that? But also, so that we then end on the opportunities side, where are we seeing the best opportunities? So I don't know if anybody wants to pick up. I mean, are there particular risks that you're building in, that you're looking at, whether that's to do with what might change in terms of regulatory side, or is the demographics really so much of a pull that kind of removes the risk side to some extent?
If I may just on this one, I think I commented on this. There is, of course, demographics is a good risk alleviator. We can take comfort in that the demand is going to be there and going to be there for the long time. However, as we said, there are a number of models. Population is changing. Population, the tastes are changing, and so it's just to make sure that the operator model is the right one, and understanding exactly where he's going, where he's coming from, and where he's going, and where he, how is he targeting his sort of operations to the local market, because it will always remain also a local market. So that would be the risk for me, is really making sure we each time understand the operators. I think some will struggle because it is a developing market, and some operators will pick the wrong model, because either as Andrew said, they were too developer orientated, and they weren't they didn't consider the operations enough, or for any kind of reasons. But I think that's really the key for me looking at that sector.
Great, thanks. So let's do 30 seconds each on opportunities. Nabil, let's start with you. Where do you see the opportunities going forward?
I think some of the complexities that we all discuss on this call, the fact that the sector is still on this journey of becoming more institutional, it's hard to understand. It's a lot of variety and diversity across different markets. I think that's complexity, but to me that is opportunity. And for investors who are ready to deploy capital at this early stage, because the demographic story is so compelling, I think that is to me opportunity. And I think doing it in a way that reads demand and tries to understand it. I think a lot of questions came on demand, and what the consumer wants is where the opportunity is. Trying to future-proof the delivery of the product to what the target consumer wants over the medium and long term.
Great, thanks, Nabil. Michael.
I think for me, the opportunity is something that actually is a slightly kind of dystopian vision of the fact that we're running out of people to provide the care that we need. So in the UK, by 2035, the latest figures show that we're going to be between 500,000 and 600,000 care workers short. We'll need additional 500,000 to 600,000 care workers. At the same time, we have large cohorts of baby boomers going to be retiring, that there's a huge pressure on the care workforce. And I think that will... it's going to be a difficult conversation for politicians, but ultimately I think that means we need to look at efficiency and unit costs or unit output per care worker. And the best way you can increase that is not by paying them less or reducing contact time. It's actually by locating groups of older people that need care. Don't drive around and deliver half an hour each, but put them all in one place. That's number one. And B, we need to look at the preventative impact of these communities and actually keeping people away from the care system in the first place. If you see it in that way, I can't see any other way but that this bit that sits between the home and the care home, which will be a highly specialized, quite medicalized end-of-life care for a year or so, the bit that sits in the middle, which is the bit that we're seeing growing, I can't see any other way but this growing exponentially in the next few years and being a really big part of the health and social care landscape across certainly anywhere in the G20 economies.
And by definition, Michael, I suppose that supports that idea of larger numbers in one place, so each one having a larger number of units.
Yes, correct. And I think that does, and this is tricky, and I've got to be careful what I say, but customer choice is one thing. But, everyone wants to live in really small communities that are really kind of like, familiar. But we talked about it kind of yesterday that everyone wants to sit on a quiet, deserted beach on holiday. But where do they end up going? They end up going to Mallorca and on a crowded beach. I think the reality is we are entering a stage where Western economies are going to pay north of 20% of their GDP for health and social care costs. And anything that brings those costs down is going to have to be a policy focus in the next 10 years. And this fits that gap beautifully. So that's the opportunity, I think.
Okay, great. Andrew?
I tend to agree with Michael. I nearly always do, but I have a different view on timeline. I think that this is a much longer development period than the next few years, but the inevitability of it is certain. My central thesis in healthcare investment is providing care in lower cost settings. And integrated retirement communities is exactly that. I think the care provision, whether it's with a regulated capital C or a small c, is the capital C is clearly an employment concern going forward. But with a small c, I think communities supporting each other is a great way to enhance people's experience of later living. The risks, risk also sits in a time frame. which is a challenge. And the other principal risk that I have is a worry that in a nascent sector, the experience that our customer will have is related to the poor performance of somebody entering or delivering a quality of experience that is not what we within the ARCO framework are absolutely looking to provide to our customer.
Great, thanks very much. And last but not least, Frédéric.
Well, I mean, I would take some. I would agree with most of what was said. I mean, the opportunity clearly, is the demographics. Is that this population has some needs that needs to be catered for in a particular environment. And as Michael was saying, I really think that in this type of environment, that is somewhere that is not institutionalized, that looks like something like someone can call home. But that makes it easable, affordable, to cater for these people is at least for a large part of the population is going to be the right answer. And then, as Nabil was saying, of course, there will be different answers, and so there is a challenge in choosing the right one, but that's what makes it exciting as well.
Great. Thanks very much for joining us, and thank you very much to the panel. Thanks very much, everybody.
Thank you.
Bye.
Bye.